Hi guys, welcome to another episode of What Stock, where I tell you what stock I'm buying next and why. Today I'm going to run you through my analysis of BG Staffing and why I think there's a great buying opportunity right now. Before we continue though, please make the time to like the video, subscribe to the channel because it really helps me promote the content. As of today, BG Staffing is trading at $10.24. They have a market cap of just over $100 million, EPS of $1.18, and dividends per share of 95 cents. That gives me an earnings yield of 11.62%, a dividend yield of 9.28%, and based on the 5-year earnings projections, a PEG of 0.43 and a DCF of just below 50%. At face value, this looks like a great entry point to open a position. But we still need to do our due diligence because irrespective of what the stock price does, you should never buy a rubbish company. The staffing industry in the US is worth just under $120 billion. Pre-lockdown, in a good economic environment, it grows at a rate of about 10% year on year. Because of lockdown, the staffing industry is set to see a drop of between 10 and 45% this year. Now this has hurt the share price of staffing companies short term, but it does present a fantastic buying opportunity today. Historically, the staffing sector has enjoyed a V-shaped recovery throughout recessions. And following the 2008 financial crash, the staffing industry actually saw explosive growth, twice as much growth as it typically sees in any given year. And the SIA, the staffing industry analysts, are saying that this slump is actually starting to bottom out. So can we expect that same type of exponential growth next year? Possibly. In the past 5 years, BGSF have grown their earnings per share by a whopping 79.9% year on year. They've grown their free cash flow by 12.84% year on year. They've grown their book value per share by 21% year on year for the past 5 years. That tells me they're growing their bottom line, the amount of cash I can hypothetically pocket as an investor, as well as their equity. These are the most important growth rates you can look at as an investor, and they are significantly greater than the overall growth of the industry, but more importantly, they're significantly greater than the two closest competitors by market cap, DHX and CCRN. Analysts also predict that next year they'll see earnings growth of 170%, and continued earnings growth of 20% for the next 5 years, year on year. Those are some pretty tasty growth rates and the kind of double-digit growth that I like to see as an investor. In the past 12 months, the management team has seen a return on invested capital of 15.4%, a return on equity of 18.2%, a return on assets of 10.6%. These numbers tell me the management team is able to invest its capital efficiently and far more effectively than its competition. They also get a rate of return on their investments that I would like to see personally on my own investments. Now that's a management team that I want to invest in. It's okay, I'm not going to bore you with the details. Suffice to say that the liquidity and solvency levels of BGSF is really good. They don't have a huge amount of debt, they're able to pay off their creditors in time, and worst case scenario, let's say they make no money whatsoever in the foreseeable future, which I highly doubt. They have greater cash reserves than their competition, which means they can outspend them. Okay, so after you've done your homework, you're looking for that validation that everything you've seen makes sense. Where do you get it? The analyst's recommendation? What people are saying on Reddit? No, what the insiders are doing. In the past 6 months, not only have insiders increased their equity position inside BGSF, 100% of the insider transactions were buy transactions. That tells me that the guys who own the company have faith in the company and enough faith to buy when they think the price is low enough to make a significant profit. When we actually lift the hood on those Form 4s to see who is making those insider transactions, we can see that it comes from the CEO as well as the CFO. Damn, that's some high quality insider transaction going on. When we look at the potential upside based on the analyst's 1-year estimate of the stock price, I get 48%. When I look at where the stock is trading today versus its 52-week high, I start to see a much better image as to why the insiders are super bullish on this stock. In short, I think BGSF are a great company whose stock price has been hit hard by the short-term outlook of how well the staffing industry is going to do. However, the fundamentals are too strong to write this company off as another victim of what's going on in the world. The staffing market should continue to grow at a rate of 10% year on year as of next year. BGSF should continue to grow faster than the market. BGSF should continue to grow faster than their competition. The management team is making good investment decisions. They don't have much debt, but they've got a hell of a lot of cash. The insiders have a lot of faith that this company is going to do really well. And most exciting, there's an upside potential of 48% on this stock. Full disclosure, I own BGSF. I started buying at $13 a share, and I will continue to buy as long as that share price goes down. It's a great stock with solid fundamentals, a very strong future, and it's trading at a dirt cheap price right now. Guys, thanks for watching this video. As always, if you have any questions, comments, or feedback, leave them below. Stay tuned for the next one.